Hey there! If you're thinking about buying an electric car in 2024, there's some good news and some bad news. The good news is that accessing the federal tax credit for electric vehicles will be easier this year. The bad news is that fewer vehicles will likely qualify for the full $7,500 credit. These tax credits are part of the Biden administration's plan to promote electric vehicles and reduce carbon emissions from transportation. However, the government is also trying to encourage companies to bring more jobs to the U.S. by requiring a domestic supply chain, which can create some tension between the two goals. So, for car shoppers, it can be a bit confusing. But don't worry, we're here to help you navigate through it. Starting in January, electric vehicle buyers won't have to wait until the following year's tax season to claim the Clean Vehicle Tax Credit. Instead, there's a new option to take the credit as an instant rebate right when you purchase the vehicle. This means that after some paperwork at the dealership, the credit will be available as cash in hand or deducted from the cost of the vehicle on the day of purchase. Here's how it works. The dealer confirms that the sale is eligible for the tax credit and then credits you for the amount of the credit, let's say $7,500. The dealer then submits the necessary documentation to the IRS, and the IRS reimburses the dealer for that $7,500. So, essentially, the tax credit is being handled through the dealership. However, there are still some requirements that you, as the buyer, need to meet. You need to attest that you are under the income cap, that you're buying the vehicle for personal use, and that you're using it in the United States. The income cap is based on your modified adjusted gross income, which is your income after certain deductions. For example, if you're single and your salary is $160,000 a year, you may think you don't qualify because you're over the $150,000 income cap. But if you have contributions to a 401k or other deductions, your adjusted gross income may actually be under the limit. So, it's important to consider all the factors. Another important change is that you no longer need to have a tax liability of at least $7,500 to get the full benefit of the credit. Previously, the credit could only reduce your tax bill to zero, but it wouldn't result in the IRS actually paying you. Now, even if you have no tax liability at all, you can still get the full tax credit as a cash discount for the vehicle purchase. To qualify for the tax credit, the vehicle needs to meet certain requirements. It must be assembled in North America and have a sticker price of less than $55,000 for cars and $80,000 for SUVs and trucks. However, it's not always clear which vehicles meet these price caps, so you can check fueleconomy.gov for a list of eligible vehicles. Additionally, there are battery sourcing requirements that encourage the auto industry to rely less on China and more on the US for critical battery components. Now, if you're considering leasing a vehicle, you can forget about most of these restrictions. Leased vehicles are eligible for a version of the tax credit that is much easier to qualify for. There are no requirements for the vehicle to be made in America, no price cap, and no income caps. However, keep in mind that the credit goes to the leasing company, not the person driving the vehicle. The leasing company may pass on the savings to you in the form of a bonus applied at the start of the lease. If the prices of new electric vehicles are making you feel faint, you might want to consider buying a used one. There's a tax credit for used electric vehicles as well, worth 30% of the sales price, up to $4,000. The income cap for this credit is lower, and the vehicle must cost less than $25,000. Used electric vehicle prices have been falling rapidly, so it's becoming easier to find a qualifying vehicle. Lastly, if you run a business, there's a separate commercial tax credit for electric vehicles. This credit provides up to $7,500 for a light vehicle and up to $40,000 for a larger vehicle, like a delivery truck. The commercial tax credit has fewer restrictions in terms of price caps or sourcing requirements, but the vehicle must be used for business purposes. So, there you have it. A breakdown of how the electric vehicle tax credit will work in 2024. We hope this helps you navigate through the process and make an informed decision.